So I'm not much of a follow the stock market guy, although I do have some investments, but I just saw some breaking news that Etsy was dropped from the S&P 500. And for those of you that don't know, that's like where you want to be as far as in that category, because that's all the top businesses that people are investing in that fund or in that stock portfolio. Etsy was in it. Etsy got dropped. What does this mean? Is Etsy failing? Is Etsy going to go out of business? Is Etsy going to close its doors? I don't know what it means. I got Chris Schaefer here to break it down for us, though. And he's going to actually pull up that article and we're going to actually see what it means. And I want his take on this. Chris, what do you think?
So you got to bring in the numbers guy or the data nerd, whatever you want to call me, just to look at the numbers. And of course, this headline comes across our plate, Scott, and we see Etsy removed from the S&P 500, right? Everybody has a heart attack. We got this emailed to us probably 50 times over the last week, and people are saying, oh my God, what's happening? And basically they're saying, hey, there's a couple different reasons that this could happen. And they said it was included in 2020 because they doubled their revenue and they started to become worth a lot more than they were previously. And people were really hyped up about Etsy stock, not thinking about the other thing that happened in 2020 that boosted all of the e-commerce revenue and things. And so they're saying, oh my God, they're going to get removed on September 23rd, just a little over 4 years after they were first included, right? They're saying, oh, that's not good. It's down 80% from its high in 2021. And the first thing I would say is I think we can all agree it was probably massively overvalued at that point. Yeah. Because people looked at growth during 2020 and said, it's going to the moon, baby. It's the next Bitcoin, Etsy stock. And it's dropped, and it hasn't really dropped that much in terms of the year over year revenue and some of those kinds of things. But the value dropped because it was, quite frankly, overinflated. And so then they say, hey, why are they getting kicked out? They're saying the two main reasons that somebody might be in the S&P 500 would be the overall size, meaning the overall worth, and how profitable they are. And they're saying, look, Etsy's still profitable. It's actually still pretty darn profitable. And in fact, the first half of this year, Scott, they had $116 million in net income. And while it is down 15%, it's still really good for a business of the size of Etsy. And it's still substantial for a marketplace business to have the margins. So somebody like Amazon or eBay doesn't necessarily have the same margins that Etsy seems to have in terms of their net income. And they said, when people get kicked out, usually it's for a big problem, like they're having a struggle, they're not profitable, which Etsy still is. Right? They're not up for sale. None of those reasons are why they're getting kicked off. So why are they? They said the primary reason is just the size of the market cap. So what people think the company is worth itself. And they said, look, when it was initially included, it was 15 billion, which was that beginning of 2020. And then it ramped up to more than double without the numbers behind it to really support that to over $30 billion. And now that the 2020 craziness and the 2021 craziness has gone away, they're saying, look, the market cap is around 6 billion, which sounds like a lot less, except for the fact that they are still massively profitable. And so they're not really at the size that would be included typically in something like the S&P 500. So I know people are saying, what does this mean? Right? What do you mean they dropped by, 30, 40, 50% and they're still profitable? Like, it's not something we should be worried about. For reference, they're actually ahead of Bath and Body Works in terms of total value, right? So I don't think anybody thinks Bath and Body Works is going away. If you guys know what that is, I know most of our American watchers will know what that is, right? It's a giant store. It's a giant e-commerce place in the US. Etsy's worth more than Bath and Body Works. So they're not going anywhere. And they even say, look, if they were getting taken away for serious reasons, this would be a different discussion. But it's the reality is they were overvalued, they were overhyped, and they're just not big enough to be included anymore. But it doesn't mean that it's going away. It doesn't mean that there's anything wrong. And in fact, they're still very profitable. Are their sales numbers down from that high in 2020, 2021? Yes. And they've done actually a lot to become more profitable in that time period. And we're starting to see in different places a lot of the important numbers that really drive the business, like customer retention, repeat orders. That's where their focus is. And even the announcement they made a few weeks ago, Scott, about the changes they're making to the search engine are focused on driving more conversions and traffic. So it's one of those things where it's the headline sounds really, really scary, but when you drill in and look at it just a little bit, even the article from the stock market website is like, not really a big deal. It sounds a lot scarier than it is.